What would need to happen for TSLA to not be overvalued today? Currently TSLA is trading close to $265 share, or about an $880 billion market cap. It's a reasonable argument that if an asset can beat the SP 500 CAGR, then it's a good investment, given that the SP typically provides a 5 CAGR. Let's see what would be needed for Tesla to achieve a 10 CAGR by, let's say, end of 2030. $880 billion, $1.1071.71 trillion market cap, or about $512 share. So how does Tesla make it to a $1.7 trillion market cap in 2030? I'm going to assume a 30 PE, which everyone will bitch and complain about because they hate Tesla. But I think there's reasonable arguments for and against 30. The for argument being that I believe they'll still be growing EV sales and energy storage products. If a 30 PE, then Tesla needs $1,710 billion, $57 billion in GAAP earnings. So how much GAAP earnings does Tesla make per EV sold? I'll link to a graph of the TTM-AVG GAAP earnings per EV sold in the comments. Tesla's current earnings profitability is about $5,600 per EV sold, and it continues to go up over the long term, even if rates have caused a recent drop. Earnings per EV maxed out at $10,300 in Q1 2022. Let's just assume a long-term profitability of $5,700 per EV. Super conservative emo. Tesla will need to sell about $57 billion earnings, $5,700 earnings per EV, 10 MEVs annually. Conclusion: if Tesla sells 10 MEVs in 2030, then it is not overvalued today. In fact, it beats the SP. This isn't even including profits from the energy storage sector of the business, or the wildcards of robotaxis and bots. Tesla will always be overvalued. In 2030 the stock will be $2,000 and the people here will still say it's overvalued. I'll still be holding my shares. You forgot to add the value of the charging network, and the other IP owned by the company. If it's not overvalued, it's all priced in. Honestly, it could smash that by 2030, considering that the wild cards don't seem too wild in some cases. Sure, there is plenty of speculation to be had there, but the energy side already makes billions in profit and has a better margin than the current auto side. Energy side is not going to be slowing down anytime soon. The world is literally heading in that direction now. Reading the comments in here after reading the rStocks prediction thread earlier in the day is pretty hilarious. NGL. One person in particular going full clown mode. Lol. $5,600 per EV sold. What a bizarre metric. They have different SKUs. You can't just assume every EV will have the same net margin. To use actual metrics, they had a 12.7 net profit margin in 2Q 2023. To use actual math, let's just assume they'll have a 15 net profit margin. To generate 57B in net profit, they'll need 380B in revenue, and they're currently at 94 TTM. 2030 is in 6 years, so they'll need to grow revenue at 25 CAGR. Not impossible, but could be difficult due to law of large numbers. And also I have no clue why you're saying SP 500 grows at 5 CAGR. The long-term CAGR is 10. 10M is definitely doable, especially given Tesla's obvious push to open multiple factories a year now, and still expanding current factories. This paired with Tesla Energy seems like a highly likely outcome. Tesla has been able to maintain 2-year backlog on its energy products while scaling it at triple digits each year. Energy will be as big as auto rather soon if this keep on this path. Do not forget Tesla is huge in AI. Its biggest strength in the next 5 years will be Dojo supercomputer and its autonomous driving data. And the charging network open to other brands. Tesla has currently a run rate of 2 meters a year. Looking at expansion of current factories. Giga Mexico and several other locations being discussed. Turkey, Saudi Arabia, India. I think 10 meters by 2030 is ambitious but not out of the question. Given that the SP typically provides a 5 CAG, isn't it like double that? Even if Tesla was trading at $5 per share, Reddit would still think it's overvalued. It's undervalued though. Why are you only calculating in their EVs? That's like calculating only Amazon's book sales. If they use their growing supercomputer power for additional revenue streams, the Dojo segment alone could be worth up to $500 billion of that market cap. Never mind everything else they have on the go. The daily Tesla pump thread is here again with the same faces breathlessly hyping the not car company while talking about how many cars they will sell. Every tech company is overvalued until it's not. When FBIPOD people said $1 billion was too high of a valuation, tears of joy. Amazon couldn't make money for decades until its Oz came about. Google has it down from the beginning somewhat because their whole business is linear search and advertising. Apple made money but everyone said they can't grow because of China, forgetting the services future business. Tesla is the same. When you are the most popular company, you'll get more naysayers than believers. Then those naysayers will say, I wish I bought it back then, and the cycle of wealth disparity continues. Toyota announces that they developed a solid-state battery that gives 50,000 miles of range and charges in 1 second and does my homework and solves world hunger and finds aliens in lab. This isn't even including profits from the energy storage sector of the business. Well, run those numbers and try again. It makes the answer to the question plain as day. Their earnings per car aren't going to last. They would have to get FSD to truly work for their valuation to be worth it. And I'm pretty skeptical of that. I am thinking Tesla currently is overvalued. But if they can perfect full self-driving, that would make it undervalued. Tesla car margin will decrease. It's probably about 300,400% overvalued here. Tesla would have to grow rapidly over the next 10 years and hope that its competitors do not grow. Chinese and legacy automakers. Tesla is an AI software company. A massive shutdown at other major automakers. What would need to happen is for you to take a road trip with the latest FSD beta. Aren't literally all of the top companies overvalued? Why is it overvalued today? Is it some kind of axiomatic statement that doesn't need any proof? Sentiment alone. Stop analyzing stocks. It's useless. Elon dies. Correct mathematically. Too many assumptions. When I look at competitions by price cutting, things will change. China banning it. You just butthurt you didn't buy more when it was $100 a stock. You know what? You are not alone. Concerning phase of exponential growth is already in the past. I just wonder what the expectations are. You won't get another 50 run. Especially with interests are slashing the low-margin dollar companies right now. Tech anything surrounding that industry stocks are always overvalued. IDK what people really want these days. They want the stocks to drop to $80 to buy. And then scream that it's a dead stock if it ever did happen. Edit yes. I'm aware Tesla isn't a tech company.